Hello, and thank you for joining me today. I'm excited to discuss an important topic in the insurance industry today, using advanced predictive analytics for better understanding and managing life risk insurance portfolios. Insurance companies face challenges in assessing claims efficiently and effectively, minimizing risks, and enhancing operational efficiencies. Through this project, I aim to explore how data driven methods can provide actionable insights to address these challenges. Just to give a small introduction and a background context, life risk insurance is a critical safety net for many, but accurately predicting claims is not such a small task. Factors like customer demographics, health metrics, and historical claims. They tend to add complexity to risk assessment, and my research focuses on leveraging machine learning and data analysis to improve prediction accuracy, reduce fraud, and also ensure some bit of fairness. If we talk about the goals of this project, the primary goal of this research was to build predictive models to estimate the likelihood of insurance claims being filed. By understanding these probabilities, insurers can allocate resources efficiently, adjust pricing strategies, and identify high risk policyholders more proactively. If we talk about who it benefits, this work benefits insurers by improving profitability and operational efficiency while reducing fraud and overpayment risks. And even policyholders, they can also benefit through fairer premiums and faster claim resolutions. If we talk about the data sources, the data set used for this project combines features from two different sources. One was Kaggle, and the other is US Census data. Kaggle is, of course, an online platform that provides access to a vast array of data sets, and it does makes a very good resource for data science projects. Whereas the US Census data is valuable and extensive data source for understanding the demographic and economic characteristics of the US population. Of course, we used an API from the US Census Bureau data, and that's how we were able to get the data set, which includes about 23 features, such as the age, BMI, smoking statuses, premium charges, and critical insurance metrics like number of insured people and uninsured in a region. If we talk about the data set, how it was formed, it's just as I mentioned, we just went on to merge the two data sets, and we came to a data set with about 23 features. If we just begin with a bit of data visualizations and understand why the dataset was made in a way where it is as of now, you can see the first graph here. It shows the number of features which the previous which the dataset from Kaggle had, and if you check the other one, this is the final dataset that we used. If you pay close attention, the analysis reveals that features derived from the US Census data, specifically number of uninsured people, or the margin of error, and number of insured people and the margin of error, are significantly influential in the model as compared to the sex of the individual. And this just highlights the effectiveness of a final dataset in predicting insurance claims. And by using these features, we assured that the dataset is robust enough to be used in real world scenarios and cases. To begin with some another analysis, this is a density based graph. You can see that the plot reveals a very interesting and a unique trend. We can see that as the number of children increases, the insurance charges tend to decrease, and even though it looks a bit unique or a bit not as conventional method, this phenomenon is attributed to the principle of risk pooling in insurance. This requires some domain knowledge, but a risk distribution is simply, families with more children distribute an overall risk to a larger group, and thus often result in lower premiums per person. And you can also see that a person with no children will have to pay a lot more or a lot higher premium as compared to the ones with a higher number of children. You can see that the density for 20,000 till 50,000 is very high as compared to those with 5 children. And this pattern just indicates that without the risk distribution benefits provided by additional family members, individuals may incur significantly higher costs for insurance coverage. And another trend that I saw was with the help of this particular line plot, which is between the number of insured individuals versus the number of insured in some demographic group for a selected income range in different regions in the US. From the graphs, you can see that the Northwest region consistently exhibits the lowest number of individuals, and this is for both the income ranges and also within a specific income range. So it is in overall Northwest region faces lack of people who are insured, and this observation highlights a very significant disparity between all the other regions, and it just shows that there is a higher need for targeted strategies to address the coverage gap in the Northwest region in the US. In order to get more insights on the data, we used ARM. I understand that it's a bit more technical, so just to break it down in layman terms, ARM is basically a technique which is used to discover patterns and trends in the data, and similar to how retailers analyze customer purchases. Now, without going deep into what the rules mean, I would simply dive more deeper into the analysis that are done, because that is what we all are looking for right now. Excuse me. So when we talk about the confidence, we realized that one of the trends that we saw was, if you look at the first line here, this indicates that a person who has not filed a claim and is aged 19 is usually a non smoker. And this suggests that younger individuals may be less likely to smoke if they have not experienced any claims. And similarly, if you see at this one, the second line here, you can see that if a person is a smoker and is aged 19, then they are more likely to file a claim. And this just gives the insurance company a bit oversight about a person or an individual before they are giving them an insurance, because they can foresee if the person is more prone to filing a claim. This is where the data gets more interesting, because here we get much more ideas. If you look at the first line here, this particular line, it shows that if a person is a non-smoker, he's aged 18 and has filed insurance, then that person would most likely belong to a region 2 and will have zero children. And for reference, region 2 is southeast. So what it says is that if a person is a non-smoker, is 18 years of age, and has filed a claim, that the person is more likely to belong to the southeast region in the US and is more likely to not have any children. And you can just find similar many other instances and rules and examples, which only helps in elevating the insurance policy claim process, and it helps the insurance companies to understand how much money they need to allocate for any future claims that can be uh, happening in the future. Moving on towards the more predictive modeling side of this project, without getting deeper into what the technicalities were and how the coding was done, if we just simply talk about the results, I think it would be more efficient, and that is what we are all looking for right now. We used many different predictive models, but the ones that were really outperforming others have been mentioned here. Um, SVM is one of the operative models that we use, and we use three different kernels. You can see the accuracies mentioned here. Linear kernel was 89%, polynomial kernel was 91%, and RBF kernel was 94.24. So this was the operative model that I thought was the best performing. When we used random forest, we came to a 99.99% of accuracy, and was exceptionally good with classifying claims correctly without any false negatives or false positives. And again, we used add a boost, which gave us an accuracy of about 88.23%, and it was also very good with dealing with accurately predicting the claims. So predictive modeling, of course, it has helped us to put this model in a much more real world scenario, and I believe that either the RBF kernel or the random forest can be used in real world scenarios with this particular data set. All in all, to conclude, the key findings would be that number of uninsured margin of error or number of insured margin of error, it definitely enhances the predictive accuracy for insurance claims, um, because that is what we saw from the first visualization that it was actually affecting more than the sex of an individual. Um, More children correlate with lower charges due to the risk pooling that we talked about, and while individuals without children they incur higher costs. And the northwest region, if you remember the line plots that we talked about, the northwest region requires highly targeted strategies to improve the insurance coverage there. This can also be due to the, since it's a number and not a percentage, I think it could also be because the number of people who live in that region is less as compared to the other regions. But even then, it has been seen that the northwest region would require some targeted marketing for improving the insurance coverage in that region. If we talk about the analysis, of course, ARM revealed very unique key correlations between smoking, gender, and age-related claims, and support, confidence, and lift metrics. These are the rules that we used for ARM. They help us to tailor strategies for any specific demographics. When we come to predictive modeling, machine learning models provide robust predictions for life risk insurance claims. As I talked, random forests and SVMs, they are best for identifying complex patterns and outliers. And insights empowers insurers to optimize portfolios, reduce frauds, and ensure fairnesses. The challenges we faced were that there's not enough data for the set topic. This was, of course, overcome by gathering data from multiple sources and finding a way to join them in a way that it holds data integrity, because that is the most important part before we proceed towards any data analytics. Otherwise, it's of no use. Data preparation for analysis, of course, analysis done through ARM was challenging, and it required the dataset to be in a particular format, which was achieved using several other techniques. And data consistency, which correlates with the first point that I mentioned, which I had to review multiple API documents to extract and format data, and was making sure that it aligns with the project requirements. That's it, and thank you from my side. Thank you so much for providing me this opportunity, and I really loved working on this particular topic. Thank you. Have a good day.